Good afternoon. My name is Meg Moss, and I am the Chamber of Commerce Executive Director for the Sanford Area Growth Alliance. Today, via a question and answer format, we will discuss how to avoid running afoul of Paycheck Protection Program loan forgiveness rules and other practical advice regarding the PPP loan. Today, I am joined by Drew Haddock, an experienced tax and accounting professional and partner with DMJ Company PLLC. He assists his clients with income tax planning, compliance issues, IRS notice correspondence, and multi-state tax compliance. He also advises clients on complicated transactions, including opportunity zone incentives and mergers and acquisitions. Most recently, Drew has become the resident go-to professional on small business administration grants and loans, assisting a multitude of clients and chamber members with questions regarding the economic injury disaster grants and loans and the Paycheck Protection Program, which we will be discussing today. Drew enjoys playing golf and attending a variety of sporting events. He says, "Go Pirates, Wolfpack, and Panthers." Please note that the information provided in the webinar does not constitute legal advice. There have been a lot of changes made to the PPP program and its forgiveness rules, so we are here today to learn about those to the extent possible. There are certainly questions out there that even our accountants and bankers cannot answer, simply because they have not received guidance from the federal level. So please be patient with your PPP professionals who have been working tirelessly around the clock to help our small businesses. Now, let's get started with the questions that we have that have been submitted by businesses. So first, Drew, I'm going to ask you, what is the deadline to apply for the PPP?
Thank you, Meg, and thank you for that introduction. I appreciate the Sanford Area Growth Alliance having us and allowing DMJ to present and talk on this very important topic. And here lately, I've been a big Hurricanes fan, hockey, it's great to have sports back. And so it's fun. It seems like life is not back to normal with all this, but getting a little bit closer with some live sports and different things going on. So again, thank you. So the question, what is the deadline to apply for PPP? So the current deadline is August the 8th, which is quickly approaching. And the original deadline was June the 30th. But on June the 30th, there was an estimated $130 billion remaining in the program. And so on July the 4th, President Trump signed the PPP Extension Act, extending that deadline to August the 8th. And that's where we stand now. And one thing that I'm going to reiterate several times during our conversation today is that I wouldn't be surprised if this gets extended again, even further out, just because I believe there's still a lot of money hanging out. And as I'm going to talk about later on, there's additional flexibility looks like it's going to be put into place with this next stimulus package.
Okay, thank you. What are the modified rules for forgiveness?
So the modified rules, I'm going to start by, this is going to be somewhat of a long answer. Originally, the cover period was 8 weeks. And I know a lot of folks that may listen to this are somewhat tired of hearing about, all the original parts of the PPP, and it's changing every day, it seems like. But there have been a lot of significant changes, and these modified rules come from, on June the 5th, the President signed the PPP Flexibility Act, which extended the cover period from 8 weeks to 24 weeks. So if you receive a loan prior to June 5th, you have an option to either use an 8-week or 24-week covered period. And as a reminder, the covered period is the period of time that the borrower's use of funds are analyzed to determine the amount of loan forgiveness you're eligible for. And the covered period begins on the date the lender first disperses the funds to the borrower. And so going along with additional, so the first item is the covered period has been extended to 24 weeks. The next item is to earn forgiveness, at least 60% of your loan must be used on payroll costs. The other 40% can be used on any payment of interest on any mortgage obligation, real or personal property that was incurred before February 15, 2020. Any payment of rent under a lease agreement in force before February 15, 2020. And any utility payment, electricity, gas, water, transportation, telephone, or internet for which service began before February 15, 2020. And we get a lot of questions on the transportation part of that, and that is totally up to interpretation. So that's another, the 60-40, 60% on payroll costs, 40% can be used on these other items. Originally, before this PPP Flexibility Act, it was 75% had to be used on payroll costs and 25% could be used on these other items. So that's another item that's added flexibility. And then any portion of this loan, of course, that is not forgiven must be repaid in 5 years. And originally it was 2 years at 1% interest. Loans received prior to June 5th still have a maturity of 2 years, but this can be renegotiated with the lender. The other item that's kind of new, and I hope I'm not, I'm really expanding on this because there are so many new items with this PPP Flexibility Act, but it allowed PPP participants to also defer their employer share of Social Security tax. So any employer Social Security tax, half of it can be deferred to December 31st, 2021, and the other half can be deferred until December 31st, 2022. And that was an additional item that was added in. The CARES Act put into place this payroll tax deferral for employers, but initially it said if you participated in the PPP loan program, you weren't eligible for this program, and now you can defer those taxes. Now it's only a deferral, you still have to pay it, but if your business is tight on cash and you're looking for ways to kind of keep your cash intact, this is an option for you.
All right, thank you. And before we go on to the next question, I'm going to ask you to tilt your computer down just a little bit. There we go. Perfect. Now we can see your whole face. All right. Who can apply for forgiveness using the easy form versus the long form? So
there's two forms, as you mentioned, the long form and the easy form. And the easy form is going to be the form that you're going to want to use because the long form is more complicated and it's going to take more of your time. And so in order to be able to use the easy form, you have to be able to check one of three boxes in the instructions of the easy form. And the first box is if you are self-employed, an independent contractor, or sole proprietor who had no employees at the time of the PPP loan application and did not include employee salaries in your PPP loan amount, then boom, you could check that box and you can use the easy form. The second box is if you did not reduce any employee salaries by more than 25% during your covered period compared to January 1st, 2020 through March 31st, 2020, and you did not reduce the number of employees or average hours paid to employees between January 1st, 2020 and the end of your covered period, then you can check that box and you can use the easy form. Essentially, you didn't reduce salaries of more than 25%, and you haven't reduced any full-time equivalent employees. You qualify for the easy form. And the last box is very similar, except it says that essentially you didn't reduce anybody's salaries by more than 25%. But if you did reduce hours or employees, you did so due to compliance requirements or guidance issued between March 1st, 2020 and December 31st by DHHS, CDC, or OSHA related to social distancing, sanitation standards, or any other work or customer safety requirements. If you had to reduce your workforce because of those requirements and you didn't reduce any salary, then you still qualify for the easy form. So those are the three options. If you fall into one of those three buckets, you can use the easy form for your application.
All right, thank you, Drew. what must the 60% of a business loan be used for to get full forgiveness?
So the 60%, as we discussed earlier, has to be used on payroll costs. And so payroll costs include salaries, wages, commissions, and similar compensation for employees capped at $100,000 per person on an annualized basis. Payments for vacation, parental, family, medical, or sick leave are also included. So is severance pay and payments for group health insurance benefits. This also includes owner compensation, general partners, Schedule C, owner operators, independent contractors, S corporation owners who also receive are considered employees and receive W-2 wages. All of that is included in payroll costs.
Okay. And is it based on cash or accrual? So costs incurred or payments made?
So, Meg, it's actually very flexible. Both costs paid during the covered period and costs incurred but paid after the covered period are eligible for forgiveness. So say that maybe your last payroll date falls just after your covered period and includes the prior 2 weeks of pay, you would be able to include all that pay that was incurred during your covered period. So the Treasury and the SBA has been very flexible with some of these things. And they're constantly, it seems like every time they release additional frequently asked questions or interim final rules, as they call them, to me, it's just adding more and more flexibility. And that's why I reiterate to everybody, you're going to want to be really patient in applying for forgiveness because there's constantly more information coming out. And I say be patient and not rush it because there is no rush, and B, in my opinion, you don't want to waste your time going through something where they're probably going to come out with a rule that possibly lessens your burden of what you need to provide the lender or which application you use.
How long does a business have to spend the loan?
So loans received prior to June 5th, 2020 had the option of 8 or 24 weeks. And I kind of hit on this a few minutes ago. Loans after June 5th have 24 weeks. You can apply early if you have fully utilized the funds between 9 and 23 weeks, I guess. However, you're still certifying, as of right now, if you applied early, you're still certifying that you did not have any full-time equivalent reductions or you didn't reduce any employees' pay by more than 25% for the entire covered period of 24 weeks. And so I guess if you applied early and you certified no reductions to FTEs, no reduction of pay, you're certifying that for the whole 24 weeks. Now, there's proposed legislation, as everybody's heard about this next stimulus package, to essentially allow borrowers to name their own covered period, which will kind of get rid of this confusion, because if you applied early and your forgiveness was granted, but then you laid off employees, well, technically you're supposed to go back to the lender and say, hey, I certified I didn't lay anybody off during these 24 weeks, but actually I did. And so that would reduce your forgiveness amount. And I think that kind of covers that for how long you need to spend, how long do you have to spend the loan. And the next thing that's really great about giving people the additional time is that, the loan amount was based on 2.5 times your average monthly payroll in 2019. Well, 2.5 months of your average monthly payroll. So, expanded to 24 weeks, really, if you kept your employees at the same level and pay at the same level, you should have more than enough time to essentially use all of your PPP money on payroll costs. And so that's just, and then you don't have to get into the specific questions on, well, I moved offices and I signed a new lease agreement after February 15th. Does that count? And to me, it's just, if you can just use it all on payroll, it's what it was designed for. that's going to make it, probably the easiest and cleanest.
Okay, thank you. The next question is, do I have to apply for forgiveness from the bank, or will it be automatic? And does this depend on the size of my loan?
So great question. You will apply for forgiveness with your bank or lender using either Form 3508, which is the full application, or Form 3508EZ, as we discussed, and how you can use the EZ. There is, however, currently proposed legislation that will give blanket forgiveness for all loans less than $150,000. And I believe the last I looked, essentially 87% of the total loans that have been given through the PPP program are less than $150,000. And so if this legislation passes, apparently the borrower would still sign a one-page attestation form certifying that the funds were used appropriately. But that's one of the reasons I'm telling folks to, hey, pump the brakes on forgiveness. Let's wait and see, because before you spend a lot of time on the application for forgiveness, very likely that Congress is going to put together, hopefully, something that kind of gives everybody a blanket forgiveness.
Okay. When is the forgiveness application due, and when can forgiveness applications even begin?
So forgiveness applications can begin now if your lender is accepting. I'm not so sure that every lender is quite yet ready to accept. I mean, I feel for the bankers and the banks out there, because this has just been a lot of new, information and a lot of new stuff to put in their systems and get their systems ready for. Payments of principal and interest are not due until 10 months after your cover period ends. So essentially you have 10 months to put in that application for forgiveness. But really, per the rules, you don't have to apply for forgiveness. You just have to apply for forgiveness before the maturity of your loan. So if your loan maturity, if you got your loan after June the 5th and your loan maturity is 5 years, you could sit there and pay principal interest on your loan, and then right before the maturity, apply for forgiveness and have it forgiven. I don't know why anybody would do that. So I think most people are going to want to apply within 10 months at the end of your covered period, which gives you plenty of time. It gives you into 2021. So again, being patient and waiting for this legislation over the next, hopefully within the next month, is going to be very key for a lot of people.
Okay, we're going to switch gears a little bit with this next question. Will sewer, waste removal, and cell phone bills fall under utilities? And where can I find more concrete answers?
So concrete answers, that is a funny and interesting point, because when it comes to these utilities, to me, it's very murky. And yes, I believe that sewer, waste removal, and cell phone bills fall under utilities. But when we start getting into those more specific costs, it becomes a little murky. There has not, that I have seen, has not been any specific guidance regarding utility costs. So once again, I would try my best, if I'm a small business, to stick to using payroll costs as much as possible. You definitely are allowed to use it on these items, and you'll have to show proof to your lender that you spent the funds on these items. So my opinion, as of right now, all that stuff would fall under utilities.
Okay. And what about, does fuel for business vehicles fall under transportation?
So I believe this is one of the most popular questions that we get. And the honest answer is that I don't know. We have no clear and concise guidance on what falls under transportation costs. I would assume yes, but I hate to put assumptions out there, and I haven't heard anybody say that fuel qualifies. So I'll just leave it at that.
Okay. Switching gears again a little bit. Another question that came in, and we had great questions that kind of flooded in. So we appreciate everybody who submitted questions prior to the webinar. But as an owner operator, will my salary be completely forgiven?
So I assume it will be, barring any additional guidance to the contrary. The loan amount for owner operator is based on 2.5 months of your average pay from your 2019 Schedule C net income, capped at $100,000, or a maximum loan amount of $20,833. And so I haven't seen anywhere where, you know, any forgiveness would be reduced if you don't have employees and you're just an owner operator, independent contractor. I would expect you would get full forgiveness for your loan.
Okay, thank you. What if my FTE headcount drops during the 8 or 24 weeks, and how is the amount of forgiveness determined?
So if you have a reduction in your headcount during your cover period, you will look at your average full-time equivalent FTEs, employees per month, between 2 periods. And so the 2 periods that you'll compare your average FTEs during your cover period to would be February 15th, 2019 through June 30th, 2019, or January 1st, 2020 through February 29th, 2020. And so just let me give a little background on, for those that maybe want to know what an FTE is. The SBA and Treasury have defined a full-time equivalent FTE as an employee who works 40 hours per week or more. Part-time employees have their hours added together and then divided by 40 to determine an FTE. So for instance, if you just had 2 part-time employees who each work 20 hours a week, you would add them together, divide by 40, you have 1 FTE. Or if you just have 1 employee who works 40 hours a week, you have 1 FTE is capped at 40 hours. They work more than 40 hours, it's still 40 hours. Back to if you have a reduction in your head count, you're going to look at your 8-week or 24-week covered period. Whatever your average FTEs are during that period, you're going to compare it to the lesser of, again, February 15th, 2019 to June 30th, 2019, January 1st, 2020 to February 29th, 2020, whichever one of those 2 time periods you had the least amount of FTEs, that's what you're going to compare it to. As long as you had more FTEs during your cover period than you did one of those 2 time periods, then you don't have a reduction. Now, if you have less, then you're going to have a reduction in your forgiveness, comparable to the percent of your reduction in FTEs. Similar to reduction in wages. And I'm going to get into this a little bit here. If you're allowed to reduce an employee's compensation or their hourly pay during your cover period, but not by more than 25%. And so somebody's sitting here asking, well, compared to what time period? Well, you look at each employee's compensation during the first quarter of 2020 on an annualized basis. And then you compare that on an annualized basis to that employee's compensation during your cover period, 8 or 24 weeks. And as long as you didn't reduce anybody's compensation by more than 25%, then you're okay on this. Now, if you did, then once again, you're going to have a reduction in the amount of forgiveness that you're eligible for. And so the SBA and Treasury have provided several kind of safe harbors, and because obviously there's always reasons why you have to let somebody go, or maybe an employee resigns on their own. And so the SBA has said that reductions do not include voluntary resignations, voluntary hours reductions, being fired with cause, or if you've laid off or furloughed somebody and then offered to bring back an employee at full pay and they refuse. Nor do they include if you try to hire a similarly qualified employee. And so if any of those things have happened, you just need to make sure you have documented that and you have put it in your records. And then there's 2 additional safe harbors for people. And one of those is if you were forced to furlough, lay off, or reduce wages of employees during the period between February 15, 2020, which is essentially kind of the start of this pandemic here in the U.S., and April 26, 2020, which is when the CARES Act passed and the PPP program came into existence. If you had to lay somebody off during that time period before you even knew about PPP period, if you rehire or restore that employee by no later than the end of this year, December 31st, your loan forgiveness will not be reduced. And so that's really helpful because maybe a business, you didn't know about this PPP program and you took a hit right at the beginning of this thing. You had to lay off some employees, and then you were able to get a PPP loan maybe in May. So it gives you the opportunity to bring somebody back onto your payroll by the end of the year to help you, not have any forgiveness reduced. And then the last safe harbor is if you had to reduce your workforce because of government guidelines from the CDC, HHS, OSHA, or state and local laws related to sanitation, social distancing, or other safety requirements that kept you from operating your business at the same level as you were before February 15th. So if because of different guidance and regulations that government agencies have put out, you're unable to operate at the same level and you've had to cut hours back or cut employees back, your forgiveness will not be reduced. And this is kind of a good faith certification.
Okay. That leads directly well into the next question. Do employee names matter or just the number of employees? So for example, do I need to rehire the same people?
So no, the employee names don't matter specifically. It's based on the number of employees, your average FTEs. If you lay somebody off, you can replace them with a similarly qualified employee. So it doesn't have to be that exact same person.
Okay. And I believe you mentioned this before, but what if I offer to rehire someone and they refuse the job?
So you can document that and hold that in your records. And there might be something that you're required to get that employee to sign. I can't remember exactly. I believe there is some type of statement. But your forgiveness will not be reduced if you have offered somebody their job at their full pay that they were making and they refuse to accept it.
Okay, thank you. The next question is, do we have to keep our employee count for the full 24 weeks? What if we, for example, have to lay off employees at 12 weeks into the PPP loan?
So as of now, you do have to keep your employee count. If you're using the 24-week cover period, you have to keep it the same for the whole 24 period. Now, the pending legislation in Congress appears to add additional flexibility. This isn't law yet, that would allow you to choose your own cover period between 9 and 23 weeks whenever you use up your money. And so if that's the case, then you could lay somebody off after your chosen cover period and not affect your forgiveness. But if you have to lay somebody off during your 24 weeks, like at week 12, that's going to count as a reduction.
Okay. Do I need to subtract the EIDL advance amount from my PPP loan forgiveness amount?
Yes, you absolutely do, Meg. You're not allowed to have full PPP forgiveness and the EIDL emergency grant. You will have to pay back. If you got the full $10,000 emergency EIDL grant, you'll have to pay $10,000 back as part of your PPP loan. You can't have full PPP forgiveness.
Okay, thank you. Should we be planning to scan or upload any receipts should we have this type of documentation ready as a business who's received the PPP loan?
Meg, absolutely. Per the instructions on both forgiveness applications, the 3508 and 3508EZ, you are required to provide documentation to your lender to verify all qualified expenditures. So for payroll costs, this will look like bank statements or third-party payroll service provider reports documenting cash compensation paid to employees. It would also include tax forms, your Form 941 quarterly payroll tax filing, and state quarterly business and individual employee wage reporting and unemployment insurance tax filings as reported. And then for all other eligible expenses, the 40%, rent, interest, and utilities, all those eligible expenses, you must provide documentation to verify that the existence of those obligations you had before February 15, 2020, and then proof of payment, proof of those payments. But again, right now you have to submit all this information, but I know the banks and the lenders and Congress, everybody's rallying for, hey, if you had less than 150,000, we don't want to be burdened down essentially with all this additional information. And I really believe that it's going to be extended, to loan amounts between $150,000 and $2 million. You won't get automatic blanket forgiveness, but you may get, hey, we don't need all that additional information. You keep it in your files, because if we audit you to see how you spent your PPP money, you're going to have to provide it at that time, but we don't want it right now with your loan forgiveness application. So yeah.
So keep your records. All right. So the next question that came in from a business is, I've spent over 75% on payroll. I'm not sure I will exhaust all of my PPP funds. I plan to give the extra funds back. Will I still get forgiveness on the funds that I've used?
Yes, you absolutely will get forgiveness on the funds that you used. Again, sometimes I wonder, hopefully with the new 24 weeks, and since your loan amount was based on 2.5 months of average monthly payroll from 2019, if you haven't reduced people, you haven't reduced pay, then now you have, 6 months to use up that money on payroll. Hopefully you're eligible to use it all up. I would hate for somebody to small business have to give that money back if they're able to use it as appropriate. So you will receive forgiveness on the funds you use as long as you do not reduce FTEs or wages by more than 25% during your cover period.
Okay.
But Meg, we want everybody to focus on full forgiveness and not having to pay anything back. That is the goal with this whole deal.
That's right. That's right. You've talked about the 60%, 40% rule. Can any of the 40% be used to pay vendors or independent contractors?
So that's a good question. And I would say yes, if the vendor or independent contractor falls within the confines of a qualified utility payment. So that's the only way, once again, anytime we get into the utility expenses, it's a little murky. And so there's a chance that maybe your vendor or independent contractor falls underneath that as a utility payment, then I think it would qualify. But it definitely doesn't qualify as payroll costs. The 60% that must be used for payroll. Payroll costs are only employees and owners. So I know that's about as clear as mud, but hopefully everybody, they don't have to fall this far down to try to get the full forgiveness.
Okay. For independent contractors or self-employed people who received the PPP, how do I make sure my loan is forgivable?
So again, if you're an independent contractor or you're self-employed and you did not have any employees at the time of your loan application, nor did you include any employee compensation in your eligible loan amount, then your entire loan should be forgiven. You shouldn't have anything to worry about, and you should be able to obtain full forgiveness.
Okay. Can you use PPP to pay for staff vacation time, sick time, non-COVID related expenses?
Absolutely. You can, vacation time, sick time, all that stuff is included in payroll costs.
Okay. What are the penalties if we do not use 60% of PPP for payroll expenses?
So your forgiveness amount, of course, is reduced then. And so what you do is you take the amount you actually used on payroll and you divide that by 60%. I'm not trying to give everybody some great math. I always need my calculator to do this math. But whatever amount you did spend on payroll costs, divide it by 60%, the result of that is the maximum amount of forgiveness you're eligible for. So that's how it would be reduced.
Okay, thank you, Drew. Are forgiven PPP funds taxable?
This is a very interesting question, Meg, and something that I scratch my head at because in the CARES Act, the amount of PPP loan forgiven was stated is not taxable income. However, the IRS, soon after the CARES Act came out, issued a notice 2020-32, if anybody wants to look it up, stating that the expenses covered by the forgiven loans represent expenses related to tax-exempt income and are therefore not deductible. So in short, the amount that you have forgiven is not taxable income, but those expenses, payroll costs, rent, interest, utilities that you use your PPP money on are not deductible. So in my mind, it's essentially saying it's taxable income because that's what it is. If you got a $100,000 PPP loan forgiven, okay, that $100,000 isn't taxable, but you use that $100,000 on payroll expenses. Well, now that $100,000 payroll expenses, you don't get to deduct that $100,000. So essentially it is taxable. And so and this is something that very well may change in the next stimulus act. So, but as you get close to the end of the year and folks are working on tax planning, if you got a sizable PPP loan, it's something that you're going to want to work with your tax advisor to make sure that you're including that and you don't have a surprise tax bill due to the forgiveness of this loan amount and the expenses you used it for.
Okay. So Drew, that comes to the end of the questions that were submitted by businesses, but I have a few extra things I want to ask you. Can you tell us about some of the pending legislation?
Absolutely. So I've kind of hit on this throughout our time together here. But many people have heard in the news about this second, I guess, really $1 trillion stimulus package. And one of the items being floated around is a second round of PPP loans. And it would allow, currently you're only allowed one PPP loan. But the legislation is kind of pending is essentially allowing businesses to apply again and get another PPP loan. But they want to put some additional barriers and restrictions on who can apply. And so currently the way it looks and the way the legislation appears, and this is all pending, so don't hold me to it and don't call me and tell me, when it passes that this didn't happen. So currently no more than 300 employees, and you must demonstrate at least a 50% reduction in revenues as compared to 2019. So they don't want just any business to get it. They want you to be a small business, less than 300 employees, and they want you to be able to prove that, hey, your business has really been hurt during this time. And so the max loan size would be, again, 2.5 times average monthly payroll costs, up to $2 million. If you have already received the PPP loan, so this is your second one, you can't have an aggregate amount between the two of $10 million. And that would be a really large amount for a small business. So I don't see that being an issue. And then again, the 60-40 rule, 60% of the cost must still be used on payroll. And then the 40% can be used on those non-payroll costs we discussed. And then kind of another item, which is kind of PPP improvements, which is kind of part of this pending legislation, is an expansion of includable forgivable expenses. It looks like they want to add in additional costs that you can use your PPP loan for to get it forgiven. I mean, to me, Congress, the Treasury, and the SBA are doing everything they can to add more flexibility and hopefully get everybody to full forgiveness. And then, as I mentioned before, there's also talk of allowing borrowers to select their own preferred 8-week cover period during 2020 to use the loan proceeds. Or not just 8 weeks. To me, it seemed like you could do 12 weeks, 13 weeks. And I don't really know the big advantage in that, other than, you might want to cut off your period because you've used up the money. And now, unfortunately, maybe you got to cut back and you got to cut some employees, or you have to reduce some salaries. And so that's another additional layer of flexibility that's being added. And then another item that I've discussed is automatic forgiveness for loans of less than $150,000. Just being able to sign a one-page attestation form saying, yes, we use this money appropriately, and we qualify for full forgiveness. There are about, as I said, 87% of the loans issued under the PPP program are less than $150,000. It's really right at 4.3 million loans under $150,000. So that's the bulk of the PPP loans. And then kind of the last item that I really personally haven't ran into this, but 501c6 organizations have not qualified for PPP loans. This would be chambers of commerce and business leagues. They would now qualify for a PPP loan. Previously, other nonprofit organizations have qualified. And so those are kind of the items that are pending, and why I reiterate to everybody, our small business community, to just be patient with this forgiveness process. You don't want to spend a lot of time on the long form of forgiveness, which even to me is very complicated. We've looked at it, and we've begun the process of helping some clients with it, and it is complicated. And so just hold off, because you have 10 months from the end of your covered period before any payment of principal and interest are due on your loan. And so don't rush it, as we're going to be getting new information and new legislation.
Okay, Drew, I have asked you lots of questions today, and I just want to thank you so much. Again, Drew Haddock from DMJ Company PLLC, right here in Sanford. Thank you for helping our listeners navigate through the PPP program, and particularly the forgiveness aspect of it. Again, I know I asked you a lot of questions. We had a lot submitted, so I appreciate our members doing that. Thank you all of you for listening. And for those of you who are listening today, if you have recommendations for future webinars that you would like the Sanford Area Growth Alliance Chamber of Commerce to host, please feel free to reach out to me at mmoss@growsanfordnc.com. And have a great afternoon, and everyone stay safe. Thanks again, Drew.
Thank you.